Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Election Commission discloses that electoral bonds worth 12,156 crore rupees were purchased between 2019 and 2024. A cumulative donation of nearly 3,500 crore rupees has the top 5 donors accounting for over 28% of total contributions. The donor list also includes corporate giants like Vedanta, Bharti Airtel, Dr. Reddy's and JSPL. Coimbatore-based Future Gaming and Hotel Services emerges the biggest donor to political parties. Data shows it gave over 1,360 crore rupees through electoral bonds between April 2019 and January 2024. Some of the lesser-known big donors include Hyderabad-based infrastructure company Megha Engineering Group and Kolkata-based dairy and packaged foods major Keventer's Food Park. Bharatiya Janata Party is the top beneficiary of the electoral bond scheme, shows data from SBI. It encashed bonds worth 6,060 crore rupees between April 2019 and January 2024, accounting for 47% of total encashments. The Trinamool Congress comes second, encashing 1,600 crore rupees during the period. Indian equity markets continue to bleed as traders digest weak global cues and the results of stress tests by mutual funds. Sensex and Nifty end 0.5% lower, dragged down by auto, oil and banking stocks. Markets break a 4-week winning streak, ending the week over 2% lower. It's the biggest weekly loss in 5 months. The government brings in a new EV policy to attract global players like Tesla and VinFast. It'll cut import duty from 100% to 15% for 8,000 fully built EVs per year, but minimum investment and local sourcing conditions apply. Mutual funds disclose results of stress tests ordered by SEBI. Some fund houses come out shining on the liquidity front, even as a few reveal risks on high exposure to small cap stocks. The 2 rupee per litre price cuts on petrol and diesel announced last night swing into effect. Stocks of oil marketing companies take a beating as the cuts come even as crude prices remain high, but oil firms say the cuts will benefit the consumer and aid in curbing inflation. And the action will not have much of an impact on their bottom line. A day before election dates are to be announced, the Supreme Court refuses to stay the appointment of election commissioners by a panel which did not include the Chief Justice of India, posts the matter for next week. The Palestinian Health Ministry in Gaza says shelling by Israel has killed at least 20 people who were waiting for food aid and wounded 155 others. Senior US politician and Senate Majority Leader Chuck Schumer slams Netanyahu and calls for new elections in Israel. All right, first up, the day's market action. The Lal Street ended in the red, but off intraday's low. Nifty and Sensex saw cuts of over 0.5%. Despite this, the Nifty managed to hold on to the 22,000 mark. Bharti Airtel and Bajaj Finance batted for the bulls, while Reliance, L&T and Infosys were the biggest laggards. Banks and mid-cap index also fell in line with the blue chips. However, markets snapped their 4-week gaining streak, with the Nifty and Sensex falling 2%. This was the biggest weekly fall in 5 months, except for IT. All other indices ended lower. Right, tracking the big story, the Election Commission published the electoral bond data furnished by the State Bank of India late last night. The data shows that bonds worth 12,156 crore rupees were purchased under the scheme between April 2019 and January 2024. The big takeaway, the top 5 donors account for 28% of all electoral bonds purchased. The number 1 donor is a lesser-known entity, Coimbatore-based Future Gaming and Services. This company purchased electoral bonds worth 1,368 crore rupees. Hyderabad-based infrastructure firm Megha Engineering and Infrastructure, which purchased bonds worth nearly 1,000 crore rupees, comes a close second. Large corporates like Anil Agarwal-led Vedanta, Sunil Bharti's Bharti Airtel and AV Birla Group promoted SL Mining are also among the contributors. Going by the data, the BJP has been the biggest beneficiary of the electoral bond scheme before it was scrapped as unconstitutional by the Supreme Court in February this year. Now, the party encashed electoral bonds worth 6,061 crore rupees between April 2019 and January 2024. The Trinamool Congress takes second place in this list, having encashed over 1,600 crore rupees worth of bonds. The Congress encashed bonds to the tune of 1,421 crore rupees. However, there is no way to use the two sets of data to find out which donor contributed to which party. That's because the SBI did not disclose the unique serial number which can help link these two sets of data. This was not lost to the Supreme Court, which pulled up the bank for this. Now, the court has issued a notice to the State Bank of India seeking a response for this by the 18th of March. All right, let's take a look at the listed companies that purchased electoral bonds between April 2019 and January 2024. Hormaz Fatakia joins us with the details. Hormaz, how much did these companies contribute?
It's a significant number nonetheless. We're keeping a threshold of companies that have contributed to more than 50 crores worth of electoral bonds. And of course, the caveat here is that all of these bonds were purchased between April of 2019 to January of 2024, while we may be comparing the matrix with different numbers. And I'll start and then list in these in this 50 crore cap. The companies that are in this list include the likes of Vedanta, DLF, JSPL, IFB Agro, Torrent Power, Dr. Reddy's, NCC, Natco Pharma, Divi's Laboratories, Ramco Cements, UPL and Aurobindo Pharma. So 12 names here. And more importantly, there are a few nifty 50 listed companies in this list as well. Now, I'll start off with I'll highlight a few of them in particular, starting off with Vedanta, because among the listed companies, this is the one that has the highest donations of over 400 crore rupees. When you compare that figure to its FY23 net profit, that is around 2.5% of its net profit for the full financial year of 2023. And as of the December 31st calendar year, the company's gross debt stood at over 75,000 crores, while its net debt was just over 62,000 crore rupees at the end of the last calendar year. So that was Vedanta there, the highest among the listed entities. Next up is Bharti Airtel, around 200 crores worth of donation. When you compare that to an FY23 profit, it comes to around 2% of that, and its own FY23 net debt stood at over 1 lakh crore rupees. So Bharti Airtel there as well. The DLF was the other one. Donations overall of over 170 crores, but the mention here is that the donations were not made by the listed entity, but they were made by its unlisted group companies as highlighted, and these donations were made specifically between October of 2019 and November of 2022. But if you compare that to the listed entity's profit in FY23, the donation made of 170 crore comes up to around 8.2% or 8.3% of the FY23 net profit of the listed entity. JSPL is the other one. There is Jindal Steel and Power. The overall donation made here was 123 crores. When you compare that to its FY23 profit, that comes up to around 3.1%. And as of the December quarter, which was Q3 FY24, the company's net debt stood at well over 9,000 crore rupees. And lastly, the standout in all of these names is IFB Agro, which has made a donation of 92 crore rupees. But what stands out is that although these donations were made over a period of almost 4.5-5 years, but if you compare that number to its FY23 profit, that is almost 1.9 times of its FY23 profit, so almost double of the profit made last year. And as of FY23, the company's cash flow from operations also stood at just 32 crore rupees. So 92 crores donated there by IFB Agro. So big names in this list, and listed entities and unlisted entities alike. And we'll give you more updates as the developments unfold. Back to you.
Right. Thank you, Hormaz, for that comprehensive update. As we mentioned earlier, Bharatiya Janata Party is the top beneficiary of the electoral bond scheme as per the SBI data. Parikshit Luthra is standing by with the breakdown of how much each party has in cash. Parikshit, over to you.
Well, the data is rather exhaustive. We're looking at 5 political parties which are some of the biggest beneficiaries of the electoral bond scheme starting from April 2029. 2019. Now, there were 22,217 bonds purchased and approximately 22,000 bonds redeemed. Close to 50% of this, that is 50% of 12,609 crore were redeemed by the BJP. The BJP redeemed bonds worth 6,061 crores between April 2019 and February 2024. 1,700 crores was redeemed by the BJP between April and May 2019, and 202 crores was redeemed by the BJP just recently in January 2024. Now, what we must also note that between October and November of last year, that is during and just before the 5 state assembly elections, most parties have withdrawn a very heavy amount of funds. If you look at the TMC, this is number 2 as far as the electoral bonds list goes. They have redeemed bonds worth 1,610 crore rupees. The Congress redeemed bonds worth 1,421 crore rupees. Congress has redeemed rupees 400 crore in bonds in October 2023 and 35 crores in January 2024. The BRS is 4th on the list. They have redeemed bonds worth 1,215 crore rupees. The BJD redeeming bonds worth 776 crore rupees. We are analyzing more political parties, but this is where the top 5 political parties really stand as of now.
All right, thank you, Parikshit, for that update, exhaustive list there. Moving on, mutual fund houses have disclosed how long it would take to liquidate 50% of their small and mid-cap portfolios. This as part of the stress test performed at market regulator SEBI's behest. The stress test comes following the regulator's concerns of bubble formation in pockets of the market because of excess retail investor interest. Majors like SBI MF have said that they can liquidate 50% of their mid-cap portfolio in 24 days, while ICICI Bank has said that it would take them just 2 days to do the same. All right, Surbhi Upadhyay is here with more on the results of the stress test.
Well, it is indeed a whole new paradigm for investors looking to invest in mid and small cap funds. Prodded by the market regulator, mutual funds have started releasing the results of stress tests that tell investors how quickly they can expect to get their money back in case of market volatility and heavy redemption pressure. Not just liquidity, mutual funds will also be making additional important disclosures about portfolio concentration, which will give investors another critical data point that must be considered before making an investment decision. Now, this move towards more disclosures comes after the surge of inflows that we saw in mid and small cap funds over the last year. And the numbers are there for you. October was a high. Small cap funds drew in close to 4,500 crores in the month of October. Now, the results of these tests will actually reveal how long it will take for a mid or small cap mutual fund scheme to liquidate first 25% of its portfolio and then 50% of the portfolio in case it gets heavy redemptions. Now, a stress scenario is being defined as one when a mutual fund can account for only 10% of market volumes, but when trading turnover is actually 3 times the normal. Now, let's analyze some of the results, starting with mid-cap funds. These were the initial ones that came in, so I was looking at them. So these are the 2 tables we must consider. The number of days it will take for these funds to liquidate their portfolio. Let's take a case of a 50% liquidation. Now, we can see for a fund like Edelweiss, which is a relatively small-sized fund, it will only take 2 days to liquidate. For Aditya Birla Sun Life's small-cap fund, the number is 4 days. If you go down and look at the larger funds, for instance, Axis, where the AUM size is in excess of 25,000 crores, then the number of days it will take to liquidate the fund, that is the mid-cap fund, is 12. That's 50% of liquidation. Now, let's look at the small-cap space and see what the numbers are looking like for some of the small-cap funds. Once again here, the smaller size funds, whether it's Edelweiss, which is about 3,000 crores, or the Motilal fund, the liquidation period is smaller, just about 3 days or so. But the moment the size gets larger, it's but natural that the time taken to liquidate will be more. Look at Axis. 19,000 crores of AUM and 28 days for liquidation of 50% of the portfolio. And likewise for Quant, it's 22 days where the AUM size is over 17,200 crores. Now let me come to some of the additional important disclosures which MFs will make. The first of these is portfolio concentration. Mutual funds will now be revealing the percentage of AUM held by the fund's top 10 investors. Higher the concentration, higher the risk in case of any of the big investors decide to liquidate their holdings. So some of the examples are there for you. In this case, Motilal has higher concentration with 12% of top 10 clients. Mutual funds will also be disclosing the concentration with respect to market capitalization. That is, how much of the fund's portfolio is large cap, how much is mid caps, and how much is small caps. A high small cap concentration generally spells lower liquidity versus a mid cap or a large cap bias fund, with liquidity increasing as you, of course, go up the market cap ladder. So just, talking about concentration over here, we can see that in this case, if you look at some of the funds, then the large cap exposure is pretty high for the quant small cap fund. Within the small cap fund, it has a large degree of large cap exposure, whereas some of the other funds, the small cap exposure, for instance, for the Aditya Birla small cap fund is pretty high. 82% of the fund is actually pure small caps. So along with these disclosures, MFs will continue to report volatility measures such as standard deviation and portfolio beta. Investors can also assess the overall portfolio valuation via the trailing 12-month PE, which will be disclosed along with the PE of the fund's benchmark index. Experts advise evaluating all these parameters together: liquidity, portfolio concentration, portfolio volatility, and valuations before taking an investment call.
Thank you, Surabhi, for that update. On that note, it's time for a short break. But coming up next, the government brings in a new EV policy to attract global players like Tesla and VinFast. But minimum investment and local sourcing conditions apply. More details when we return. Welcome back. The government has approved a new EV policy to attract global players like Tesla and VinFast. The policy will see import duty cut from by up to 75%. However, there are conditions attached to it. Parikshit Luthra is standing by with the details.
Well, yes, this had been in the pipeline for some time. The government has been trying to attract the likes of Tesla and VinFast for a while now. The Prime Minister had even met Elon Musk last year. Piyush Goyal has visited the factory of Tesla in the United States very recently. What the government has done as a result of this new EV manufacturing policy is allow companies to bring in electric vehicles, import electric vehicles at concessional import duties. The import duty on fully built up cars is 100% in India. Now, this will be reduced to 15% in case an electric vehicle manufacturer commits to manufacturing in India and commits an investment, a minimum investment of 4,150 crore rupees. They will be able to bring 8,000 electric vehicles into India per year and sell them in the market at 15% import duty. By the end of the third year, they must start manufacturing in India and they must achieve a 50% domestic value addition by 5 years in India. Now, in case this minimum investment threshold or the manufacturing timeline is not met, then the government can even encash or seize the bank guarantee that is submitted by the company. Let's see how local automakers respond. We spoke to R.C. Bhargav, the chairman of Maruti Suzuki, a short while back. He said that such a policy will encourage innovation. It is only for the upper end of the market and does not really impact the domestic automobile market. But we have seen very strong reactions in the run-up to this policy during the stakeholder consultations by the likes of Mahindra and Tata Motors. Let's see how these companies respond. But interesting times. Let's see whether Tesla makes an announcement on India soon.
All right, all eyes are on Tesla. Thank you, Parikshit, for that update. Moving on, Walt Disney-owned Star India has initiated arbitration proceedings against Zee Entertainment. Star India has alleged non-compliance of the cricket broadcasting agreement between the two entities. This as Zee cancelled the deal for broadcasting the ICC Men's Under-19 tournaments after the collapse of its merger with Sony. Star India is now claiming damages for non-compliance of its August 2022 agreement with Zee. However, the actual amount of damages remains undisclosed. Now, stocks of Paytm's parent company 197 Communications surged. National Payments Corporation approves its third-party application provider license. The license will allow UPI transactions to continue on the Paytm app. Sources tell CNBC-TV18 that escrow accounts for payments online merchants would be handled between Axis Bank and Yes Bank. Meanwhile, accounts of Paytm offline merchants will be handled by Yes Bank exclusively. Remember, RBI's March 15 deadline mandates that any merchant's bank account still linked to Paytm Payments Bank will have to be moved to other banks by today. OMC stocks slumped after announcing a 2 rupee a litre cut in petrol and diesel prices late last night. Sources tell CNBC-TV18 that the industry has headroom for petrol and diesel price cuts as these reductions have been calibrated. Petroleum Minister Hardeep Singh Puri has called the move courageous.
The interesting thing is जो हमारी states हैं और जो non-BJP states में उसमें if you look at the price differential, it's massive now. They probably still have under recovery on diesel, but it's their call. You see, once if they're making money otherwise, they're willing to do it. And they must have an expectation कि the geopolitical situation, etc. So they do their calculations and come to us. अरे मैं तो चाहता और भी करता, but they have to work up. My God, so they've done 2 rupees for petrol and diesel, and we have welcomed it. It's a courageous move, but ये you know, I think after doing 3 good quarters, they must have felt कि अगला quarter भी सही आएगा.
Gyanesh Kumar, Sukhbir Singh Sandhu took oath as the new election commissioners. 2 out of the 3 seats in the election commission had fallen vacant after retirement of Anup Chandra Pandey in February and Arun Goyal's resignation earlier this month. Moving on, the Supreme Court has refused to stay the appointment of election commissioners by a panel which did not include the Chief Justice of India. The apex court has now posted the matter for next week. The Palestinian Health Ministry in Gaza says shelling by Israel has killed at least 20 people who were waiting for food aid and wounded 155 others. Senior US politician and Senate Majority Leader Chuck Schumer slams Netanyahu and calls for new elections in Israel. And with that, it's a wrap on this edition of Business 360. More news and updates continue on the other side. Stay tuned.